Thank you for staying tuned. And for the first time this week, it looks like Brexit may not be dominating the headlines. Well, let's check with Juliana on other economic news on the wire. Good morning, Juliana.
Audio.
Well, as expected, the U.S. Fed cut.
Good morning.
The U.S. Fed cut its benchmark interest rates. What will this mean for investors in the U.K. market, even in the midst of this Brexit issue?
Well, this is the third time this year that the U.S. Federal Reserve have cut interest rates. And as to be expected, the U.S. dollar dipped. And any time the U.S. dollar dips, the pound gains some strength. And yesterday, just after the rate cut, it was trading at about $1.30, which is almost record-breaking at these times. What I must say, Chimezie, the markets here they are looking at America, but it's mainly to do with this 15-month spat with China. There was to be a gathering in Chile in the next couple of weeks, and because Chile are having their own national protests up and down the country, that meeting isn't going to be taking place. We were supposed to be seeing Donald Trump and Xi Jinping kind of sort out a market-moving trade deal. So now that has been postponed, there's a lot of anxiety about when and if this trade spat will ever come to an end.
All right, let's check the numbers on Market Street this morning. What is happening to the equities and currencies and what are likely to shape the market today?
Well, I mentioned that the pound is doing increasingly well. And, of course, when the pound does well, the FTSE 100 tends to not do so well. So that's fallen this morning at about 12 points. Some of the big movers and shakers on the FTSE are Lloyds Bank, Lloyds being the biggest mortgage lender in the UK. Their shares have plunged about 90%. I just saw that before I came on air. So perhaps if we talk at lunchtime, we can go into the details of that. But that's really shocked the equities market. Also as well, the Eurozone, they're going to be releasing their third quarter GDP figures. A lot of people are expecting that to show either a stagnation or a decline, just as Christine Lagarde takes over the baton from Mario Draghi.
Okay, in another development, data from the Society of Motor Manufacturers and Traders shows that the UK car production fell by 3.8%. That was in September. So what's behind the car industry crisis? Is it just all about the political uncertainty?
Well, absolutely. You know, any bad data that comes out of the UK at the moment is down to the political uncertainty and, of course, the Brexit paralysis. But this new data released this morning marks a 15-month decline in car production. So it's not just the 3.8% internally. Also, exports of UK British cars have fallen by about 3.1%. Mike Hawes, he's the chief executive of the Society of Motor Manufacturers and Traders, and he said that, yes, it's due to the political uncertainty here, but also as well, he said internationally, the market at the moment for car production isn't doing that great. And he also spoke about a no deal, even though we are going into an election and there is potentially a deal on the table. He stressed that the British car manufacturing industry is really in decline because the threat of no deal is still in the air and international investors are not putting money in that industry at the moment.
All right, Juliana, thank you. We'll wait for your update in the afternoon.